Good morning, folks. Hope everyone out there is having a good start to their week. Happy Taco Tuesday to those who celebrate. It's taken on all kinds of new meanings now, hasn't it? Got a fun broadcast lined up for y'all today. It should be an interesting day in the markets, too.
Chasing the stars as they fly by. A world of dreams, just you and me. In this moment we're wild and free. The night is young, the stars shine bright. We'll chase them down, let's take flight. Chasing stars, we're reaching high. Beyond the clouds, we'll touch the sky. With every step, we're closer now. Chasing stars, we'll find our vow. The world is turning, but we won't stop. Every step we take, we're on top. A love that's written in the stars above. Chasing forever, chasing love. The night is young, the stars shine bright. We'll chase them down, let's take flight. Chasing stars, we're reaching high. Beyond the clouds, we'll touch the sky. With every step, we're closer now. Chasing stars.
We're getting started here in just about 5 minutes. Just had U.S. Red Book data coming out year over year. 4.9% gain versus a prior reading of 6.1%. Chasing stars, chasing forever. And pre-market here, we've got the S&P implying an open down about 0.14%. Nasdaq implying an open down about 0.05%. Dow 30 implying an open down about 0.2%. And the Russell looking a little more spicy, implying an open up 0.33%.
The world is waiting. the light that's in our eyes. We've been searching for so long. Now we've found where we belong. The stars align, the sky is clear. Chasing the light, we have no fear. Chasing the light, we'll find our way. Through the shadows, we'll seize the day. With every heartbeat, we'll be alive. Chasing the light, we'll thrive and climb. The past is gone, the future's near. With every step we'll persevere. We'll break the chains, we'll be set free. Chasing the light, you and me. The stars align, the sky is clear. Chasing the light, we have no fear. Chasing the light, we'll find our way. Through the shadows, we'll seize the day. With every heartbeat, we'll be alive. Chasing the light, we'll thrive and climb. In every moment, we find our truth. Chasing the light, we'll break through. We'll rise above, we'll take the chance. Chasing the light, we'll dance this dance. Chasing the light, we'll find our way. Through the shadows, we'll seize the day. With every heartbeat, we'll be alive. Chasing the light, we'll thrive and climb. Chasing the light, we'll rise above.
Good morning and happy Taco Tuesday to everyone out there that's tuned in. It's time for this episode of Back to the Futures with me, Markets and Mayhem. We're going to be talking about live order flow analysis, stocks, ETFs, futures, options. We're going to be going through a fair number of interesting instruments today to try to demonstrate how you can use order flow, key levels of positioning and options to get a better sense as to where there may be risk and reward and how better to execute in the trading environment we find ourselves in, which is one that's a bit less liquid, much more event-driven, but the flow and positioning still have a really big impact on price discovery. So let's fire things off here. I'm excited about today's stream. I think it'll be a lot of fun. First, of course, manage your risk. Always be careful about how you are balancing out your portfolio. That's what the disclosure is all about. We don't want you to get in trouble. For me, it's always been about trying to make sure that any single position, any single trade doesn't cost me more than 1% of total portfolio liquidity. Now, the folks at Bookmap would love for you to join their Discord. They've got a lot of cool stuff going on, like me, every Tuesday here, 9 a.m., doing the Back to the Futures thing. They've also got a lot of great community events. They've got educational content and support. If you're using Bookmap and you've got questions and you're trying to figure out how to get the best out of it, this is the place to go. So you can use the QR code on screen or that invite link, discord.com/invite/bookmap. And there is a really cool trading desk photo competition coming. I'm going to share my desk photo probably next week. This thing's going on for several weeks ahead, so it gives you something to look forward to. But definitely check this out. This is really cool. And the prizes are up to $1,000 in cash plus a Bookmap subscription. So there's some cool stuff that they're doing over here to really raise awareness about this platform. And I've been using Bookmap myself for about 3 years, and I wouldn't look at that day-to-day, intraday market price action and liquidity without it. Really makes that job a lot easier. And a bit about me. Been doing this for a little while. My trading journey began in 2005. I funded my own account and began trading stocks. Then I moved on to options, futures, commodities, and Forex. It sounds like a lot, but honestly, for me, it's very simple. I'm really just looking to capture momentum. Trading is often dressed up to be something where it's like you've got these prophetic forecasters. They could see what's happening before it happens. They're calling tops and bottoms and buying Lamborghinis every day. It's really not like that. For most people, it's more about capturing the momentum. And that means you're not necessarily looking to call the bottom or the top. You're just trying to capture the bulk of the move. Momentum trading strategies can work intraday. They can work over periods of days, weeks, months, even years. So this is a strategy that's more systematic in nature as well. It's more driven by data. It's not just necessarily gut feel, feels good, let's buy this, hope for the best. You can develop systems that give you triggers for entry, exit, managing risk that can help to make this much less of a guessing game and much more of a systematized journey into capturing that momentum. And think about it this way. Who are we as traders really? We're tiny little fish, minnows, swimming in the wake of the sharks and the whales. All we can really hope to do if we want to make money and build consistency is put our ego aside and follow the momentum. Follow those whales and sharks. Don't try to get ahead of them. Follow them. And that's what momentum trading is really about, realizing we're a very small part of this market, which actually affords us a lot of agility. And we can lean into that agility to be able to capture momentum. And because our trades aren't moving the market the way the big guys are, we can get in and out much more quickly. Use that to your advantage as a retail trader. Now, why do I watch order flow? It's really a big part of my day trading process, but I also zoom out and I look at order flow over longer time horizons, especially as it concerns options and futures and stocks. For me, order flow has been a way to discern where there may be opportunity, where one party might be getting ahead of themselves, who could be getting closer to a reversal. One way to gauge that type of aggression is looking at deltas as well. You can see deltas in Bookmap using the volume bubbles. The size of the bubble is the size of the delta. The color of the bubble is which side is the aggressor. Big green bubble, buyers are getting aggressive. Big red bubble, sellers are getting aggressive. It's that simple to be able to just visualize on screen where there's more attempts to take control of the price action. So for example, sometimes during that reversal event, you'll also see, let's say we had a big wave down. On that move back higher, you're often going to see buyers getting a little bit more aggressive, kind of trying to take control back from those sellers. So looking for those larger green bubbles can be helpful as well. I also like to look at the deltas in the session volume profile. The session volume profile, we'll see in just a little bit, shows us really just volume at price. We're not talking about any specific time other than the session itself, so you can get a sense as to where there's been aggression by buyers or sellers. And if that aggression happens to show you that one party is getting more off sides, if we're to infer, for example, that someone's selling really aggressively and price is moving above that, 5, 10 handles on ES, they're more likely to need to cover those shorts. If we're assuming that they're selling to open, then they've got a position that's moving against us. So watching those deltas, whether it's in the bubbles or the session volume profile, is actually quite helpful to navigate your trading and know where there also are some more important levels as it pertains to the session volume profile. Looking for large passive order flow or icebergs is also a really helpful way to identify where we may see turning points or continuation. Unlike looking at the volume profile and trying to find a really large bar and inferring that may have been an iceberg, the beauty of the MBO data package that Rhythmic and Bookmap offer is that it shows you the actual icebergs in the order flow, and it shows you them in real time. So what I do on my own setup is I optimize it to only show those icebergs that really stand out. And in doing so, that helps me to, at a glance, look at my chart and see where there may be more important order flow. You can also, as I do, set up audio alerts. So if there's a really large iceberg or stop run, you get an alert that causes you to pivot over to your chart and say, oh, this might be worth watching. There might be something actionable forming here. And an iceberg, for those that may not be aware, is simply an order where you're trying to hide the total size of inventory that you want to move. So if you have 10,000 contracts, you know you can't just throw that on the order book without scaring people away from where you want to get your fill. So maybe you'll size that down to 500 contracts and look for that to loop 20 times to get that order filled. That's what you're doing with an iceberg. You're hiding your true size. So even though I may want to move 10,000 contracts, I'm only going to show 500 so as not to scare away liquidity. And then finally, there's exhaustive trading action, where one party gets offsides. You can see that in the way things are trading, but I also created an indicator that we have on our Discord for exhaustion in the contracts we're monitoring. What that helps us to do, finding exhaustion points, can be points of reversal. Let's say someone just sweeps the whole book, they get offsides, they don't have much more ammo left, and then you start to see the other side getting more aggressive. So that exhaustion alert fires off during that initial event, then you watch for the price action to come. Obviously, no alert is a 100% win rate. So you've got to look at, after that exhaustion event, for example, if it's seller exhaustion, are the buyers willing to pick up the torch and run? If they are, then that's kind of that cue. You're looking for that initial reversal, some strong buying deltas, maybe some big multi-thousand lot icebergs coming in, and that can be a nice point to get in on that reversal. Now let's talk a little bit about the technicals here. We've got the S&P 500 futures on screen, and we're pretty close to where this chart was captured. This chart was captured maybe 20, 30 minutes ago. We're trading about 5 handles higher on ES. The point of this chart, however, is to show you a couple of key technicals. First, our swing indicator has us back long on the S&P. Second, you could see there's been a lot of buying as we get into that Ichimoku cloud. It's almost as if there's other folks looking at this similar kind of technical chart and saying, you know what, this is a buy the dip area. And as the sort of meme has become taco or Trump always chickens out, and it's not even political at this point, it's really just a matter of fact that when there's some crazy policy announcement, it's often walked back in a matter of hours, days, or weeks. And that is bullish for the markets, right? When you get an idea that, you know, we're going to put on extreme tariffs on this country and that product, and then a day or a week later it gets walked back, that taco is typically a bullish catalyst. And we've certainly had some of that going on down here as well. Another thing I want to direct your attention to are these major pivots. We can see we've made a good push above last week's pivot. If you remember, that was 5839.75. And we were able to hold that push, right? We almost tested it. This has been a key level. So last week I was saying bullish above 5839.75. This week, because we've built some considerable acceptance above the 59.28 pivot, that's the new weekly pivot. That means that as long as we're above 59.28, I'm more inclined to look for longs in intraday trades and in swing trades. And we'll go over the pivots and you can screenshot them in just a moment. But let's also take a look at the Nasdaq because it's a very similar chart. Big buying at the bottom of the Ichimoku cloud. Swing indicator says get long around there. And above this 21,035.50 pivot. All of that looks constructive. We could even have room back up to this higher pivot here, that 22,094.25. We have a Nasdaq momentum oscillator that's on the TraderAid Discord. It's a chart that I built that helps to kind of get ahead of these. And you can see on that oscillator how the Nasdaq momentum started surging in early May. Part of this had to do with upside surprises from the mega caps reporting better than expected earnings. Part of this had to do with sentiment changing, showing that people were once again getting excited about big tech. In fact, in May, big tech was the biggest component of the S&P 500 leading that recovery. So you can see why the Nasdaq would look pretty constructive here with the assumption that this could continue. Add to it, hedge funds are very underallocated big tech. They've only started buying back aggressively, but their overall portfolio allocations to big tech remain very low. So we could see some continuation here, especially if this does end up indeed being a Taco Tuesday. And what I mean by that is more policy walkback, or at least more waffling. The market starts to read into as uncertainty, lack of conviction, therefore bullish, because it's a more constructive outcome not to have some of these onerous policies. And SPX 6000 is a huge magnet level to watch here. This is still a really big level in the options chain. So I think that as we get through this week and go into next week with this light, less liquid summer trading, there's a pretty reasonable chance that we could get pulled into 6,000 and then sort of chop sideways for a bit. It looks like part of this positioning is part of a larger box trade, but there's also some real interest in calls up there. In fact, when we look at our SPX options visualizer levels, we can see that wall of calls is decidedly at 6,000. There's a lot of institutional interest in that level. So if we are to get up there, which isn't terribly too far away, right now this morning, that's only about 72.5 handles away on SPX. So if we are to get up there, I do expect that to be a formidable area of near-term resistance. That means we'll probably consolidate there. Maybe we get rejected there. But eventually, if we do make a push above that 6,000 level, let's say 10, 20 handles higher, and close there, that definitely leaves some room for momentum. Another thing that sometimes happens is you get wall hopping. The overnight trade gets us above that wall, and then we get continuation in regular trading hours. But nevertheless, watch 6,000 on SPX. I think that's going to be a pretty key level. Just like on the downside, Gamma 1, 59.50. So that's actually about 22 points above us. That's likely to be magnetic. We could get a bit stuck in that really big gamma level. So that's another thing to look at. And then below us, the vol trigger at 5,900. If we do make a meaningful push below there, volatility likely increases. Now, that doesn't mean we just go lower. It means the market tends to get more erratic and choppy. You've also got the gamma flip at 58.97, just around that vol trigger. And again, similar effect. You flip below the gamma or above that gamma flip, you tend to get trading becoming a little bit more erratic, a little bit more choppy. Often is the case also that the confluence of these levels can be a reasonably strong area of support. So I would be looking for 58.97 to 5,900 on SPX to offer us some support here. Below that, we've got Gamma 2, another big magnet. If we get pulled closer to 5,800, we probably get stuck to it for a bit. And then Key 1, that's a large area of put interest, and then the put wall is the largest area of put interest near price. So we can see we've got some chunky support to the downside. We've got some formidable resistance to the upside. Even above that call wall, Key 1 is another large area of call interest above. That could also become a formidable area of resistance and our next call wall should we hop above 6,000. And NDX, we have a similar picture here, call wall at 21,500. Vol Trigger at 21,400. Gamma 1, that big sticky magnet at 21,300. And the Gamma Flip at 20,740. With Key 1 at 19,500 and the put wall at 19,000. So similar picture here, right? Both of these look constructive. We could have room higher. And that call wall on the Nasdaq is just right overhead here. So that's another thing to keep an eye on in today's trading, because we're basically 20 points below it as we approach this market. Our weekly pivots this week, we've got S&P 500 futures at 59.28. We talked about that. Nasdaq at 21,035. We're above both of those, looking pretty constructive overall. We've got Bitcoin at 106,185, above that as well, consolidating, but overall still holding that upward momentum on an intermediate time frame. Gold and silver's pivots largely the same as last week, above both of them. I still think we have room for continuation higher in precious metals here. There's still plenty of uncertainty, whether it's geopolitical, whether it's policy, whether it's economic. And that tends to be really good primarily for gold. On the silver front, I'm more interested to see what China is going to do with their domestic stimulus, because they're the second largest industrial user of silver. So that domestic stimulus could help with demand for the metal. Copper is trading right around its pivot, just under it. I think if it can push high above that pivot, build some acceptance on a daily closing basis, we get back to highs in copper. It's like a beach ball being held underwater right now, and there's huge structural deficits in the metal. And then there's crude, 64.96. That's above price. As long as we're below that, I'm still a bit hesitant on crude. And I'm just going to quickly pop these out on social channels so y'all can see that. And if you didn't screenshot it, you can grab it there on my Twitter feed. And then finally, we've got some awesome deals to offer. For Bookmap, you can get up to 40% off using the code. I'm sorry, you don't even need a code. Just go to TraderAid.com/bookmap. You can get up to 40% off going to TraderAid.com/bookmap. It'll redirect you to their website. Scroll down to the special offers, and you can take advantage of that for the first term of a new plan. Also, right now and until June 6th, we've got a limited number of slots where you can get 30% off of TraderAid for life. That's for the life of your plan. Using the code 30LIFE at checkout. This is for new customers, new plans. This will allow you to lock in the pricing that our existing clients have. As we're rolling out new features, we are increasing some of our prices, but only for folks that are just signing up. This limited time offer allows you to take advantage of the existing client pricing for the life of your plan. Hack now, because we've only got 22 slots left, and this offer ends on June 6th. So whether those are through the use of coupons or we reach the end of the sale, either way, whichever one comes first, that's where this offer ends. So with that all being said, let's fire up Bookmap here and see what's going on. So we've got S&P futures on screen. We are just about 9 minutes away from the market open here. And folks, if you have any questions, feel free to pop them in the chat. I'll be going around the chat rooms and seeing what questions may be out there from people, and more than happy to answer those. So Cotton Dog asks, define order flow. For me, it's really about watching the tape. The flow of buy and sell orders, the volume of those orders, they can be helpful when we're looking at that, particularly when there's confluence in futures and options, or stock activity and options, or ETF activity and options, to determine the probabilities of where price may go. And I talked a little more about it as well in the earlier slides. If you want to rewind, I talked a little bit more about why I watch order flow and some of the key areas that I watch in it. So as we approach the market open here, we've got a tape that looks overall pretty constructive. I'm going to drag this screen over. This is the pivots chart that I use for intraday pivots. So this is the more zoomed in version of that chart that I was sharing during the stream. And overall, we've had a nice recovery from the European Open, really just been pushing higher. Had some chop overnight, a little bit of selling in futures, but now we've recovered from most of that. And so as we approach the market open here, we're actually seeing a little more green pop up. Small caps up almost 0.5%. Nasdaq turning green now. It was red a little earlier, now up just 0.05%, and S&P 500 implying an open of about flat or down 0.06%. Dollar index is firming up as well, up to 99.055, up 0.43% ahead of the market open. And so overall, we're above this big green line. This is a helpful indicator. It's just an EMA 21 on a 5-minute chart, and it's a great way to track momentum. And we can see we're getting back to yesterday's levels of intense interest in calls, which were quite a bit higher than what we saw in terms of interest in puts. And it's also interesting overall to see the volume coming back to SPX options, because for a while, it was crickets out there. It was so much lower than what we're accustomed to. So we're starting to see that back, and a lot more of that volume is typically expressed on the call side, which we also saw yesterday, helping us to move higher during the trading day off those lows. So on screen here, we've got Bookmap. We can see we're just kind of glued to that area of call interest. And it's the same kind of chart overnight. It's constructive from that European Open. You had a lot of buyer absorption events in the futures as well. This is the absorption indicator that I use. It really looks for unusually large buying. And overnight on Globex, it's not super liquid. So when you see this level of interest in absorbing sellers, that can help mark a bottom. And it did. It took a few attempts, but ultimately the buyers wrested control of the price action from those sellers. That last 678 absorption really helped to mark that just after 4 a.m. And since then, it's just been higher lows and higher highs on that overnight chart. So that gives us a decent setup into today. Let's look at the Nasdaq as well. Pretty similar look, almost exactly the same, as a matter of fact. Check this out. You've got 3 aggressive absorption events, buyers absorbing sellers until ultimately they put in that low, and like the S&P just after 4 a.m., that third and final absorption led to a bit of a strike by sellers. There really wasn't any other aggressive attempts until maybe recently to sell down the Nasdaq. So again, when buyers are coming in and basically saying, look, we've got demand, we're happy to absorb all those sell orders that you're putting on the tape. When you see that repeatedly, the other side is typically going to be like, we're not so sure we want to fight this. So let's see if we get a better opportunity later. So, sellers kind of stepped aside when they were getting absorbed so readily. And they were initially, that the supply they were throwing at the tape was initially having an impact. But after that final absorption event, that was it. So I think that's an interesting prelude to what we might see in the regular trading hours tape today. And then I've got to rotate some of these contracts for gold and silver, so I'll be doing that a little later. Let's take a look at Bitcoin here as well. Bitcoin is trading below that 106,000 pivot here pre-market. So it is looking a little bit less constructive into this week's price action. So that pivot was 106,185. May act as resistance overhead. So if you're trading Bitcoin or any of the adjacent assets like the miners or, God forbid, the high beta beasts like MicroStrategy, watch that level. And I'm just going to do a little bit of housekeeping here. Well, let's take a look at some of these mega cap stocks pre-market here as well. Go back a couple hours, 3 hours here, maybe a little more. So Apple's down just marginally pre-market, just about a minute, 20 seconds away. It's down about 0.15%. Amazon's up, but marginally. Broadcom up about 0.5% pre-market. And we're going to throw on the outside liquidity levels because those can be quite handy. So you could see the order book in Broadcom pre-market's actually pretty demand heavy. Apple a bit supply heavy. Amazon pretty balanced here. We're going to get back to the S&P futures because we are just moments away from the market open. "30 seconds. And markets are open here. Seeing volume coming into the futures, more demand in the order book on S&P, and we are seeing that initial push higher, continuing that move from pre-market, recovering off the lows. And you can see these are larger bubbles. That makes sense since we're in regular trading hours, but also shows there's a reasonable amount of buyer aggression coming in just off the start. And we can see that 59.53 pivot coming up just overhead. Worth watching that. Could act as an area of resistance on the S&P futures. I do like to focus on the S&P a bit because it is the center of the market. The SPX options market, for example, trades about 1.2 trillion with a T of notional every day. That dwarfs all the other options markets. So watching ES, where a lot of that hedging activity is occurring, is similarly valuable. And we do see some resistance up there just near that 59.53 pivot level. So we could see just a real rejection up there. There's also a bit of supply up there. You can see those offers thickening up post market open. So if you're looking at this through auction theory, you could say, well, it looks like buyers didn't have the demand to make that additional push higher. So just a bit of a round trip to where this market opened. And the market on open imbalance was pretty ho-hum. Negative 177 million on S&P, negative 73 million on Nasdaq 100, negative 48 million on Dow, and negative 24 million on the Mag 7. Summer trading conditions. And making just a slight new low on S&P. Got a question. What is that green rectile indicator on Bookmap called? Could you give me a little more info or a screenshot as to what you're referring to? I'm happy to answer any questions for you. Okay, so I have a question from AD on the Bookmap YouTubes asking, can Bookmap allow me to predict movements in SPX in the last 10 to 15 minutes of the day? I'm going to say that there's really nothing that can predict anything. I think it will help you get on the right side of trades. I think it will help put probabilities more on your side, but predict is a very strong word, and it essentially applies being able to see into the future with certainty. I don't want to be very careful because there's nothing in the world of trading that can really do that unless you have inside information that you're trading off of, which is generally quite illegal. So I would say that what it can do in that last, say, 30 minutes to 15 minutes is it can show you where the interest is. It can show you where the aggressors are. And if you color in some options data on that, it can also show you where some of the larger trading desks are looking for price to go. So I think between Bookmap and the SPX options visualizer, trading that half hour can be a little bit more intuitive, but I'd also say be aware. The first and last half hour of the trading day are where the vast majority of institutional transacting happens, and you have a lot of cross currents. You've got some desks that want to buy, some desks that want to sell. Maybe they're buying and selling different parts of the market. The impact that can have adds to volatility. So often is the case, you don't necessarily want to be too aggressive in that first or last half hour of the trading day. That's just my 2 cents on it. Hopefully that's helpful. May not have been the answer you wanted to hear, but it's the answer I feel like I should give you to give you full transparency about how all this sort of stuff comes together. And we are seeing a little bit of volatility to start the trading day. S&P futures making a new cash session low recently and then coming back to basically retest that level. Point of control being dragged just a little bit higher here. And it is not a very liquid book. It's about 27,000 between the bids and the offers. You got 11,000 on top here on the offers, 16,000 on the bids, delta of about 4.4 thousand. That's a pretty light order book. It's been like this now for about 4 or 5 months, which means it doesn't take nearly as much volume to move price. So if either side gets aggressive, you can have a market that moves much more freely. For me as a trader, that means I do want to use smaller size because, there's that. And then there's the tail risk of a headline coming out that can shoot price higher or have it come, tumbling down pretty quickly. And that's another tail risk you've got to kind of add to the calculus of how you're managing risk. Let's take a look at some of the majors here as the trading day starts. Wow, a lot of volatility here in Apple. Let's zoom in. Maybe just a little bit less. And you can see Apple started off with a nice punch, like the S&P 500 was trying to rally, and then it just gave up the ghost, right? So there was this pretty chunky move higher, about $1.50, right into a small offer. So I don't know if it was lack of demand or so much just, the rest of the market pulling Apple lower. But from there, you tested that level 3-4 times, and then it's just been lower highs and lower lows. And now we're starting to consolidate and make a push above the point of control. This is also a bit of an offer heavy book with a delta of 2.2 million favoring the offer over the bid. Amazon, kind of a similar look to Apple here. We're going to also zoom this one into 10 minutes. And you had that big push off the open. This one did land just below supply at 209, 23,000 shares on offer, and was rejected. Now trading just below the point of control with some continuation lower. So unlike Apple, which is consolidating here, Amazon's just in an intraday downtrend. Order book's also a bit heavy on Amazon with a delta of 1.4 million favoring the offer. Let's take a look at Broadcom. Broadcom looks like it's just consolidating here overall, and it really is. There's a significant offer overhead at 252, about 50,656 shares, now 52,656 shares on offer there. I don't think this thing can really move higher unless buyers are able to clear that. That is to say, right now they're behaving like they just don't have the demand. They're just comfortable staying below that, trading above the point of control, but not really making much of a push either way. And Alphabet, looking a lot like the rest of these Mag 7 stocks, opened up with a bit of a pop and now just pulling lower. You've got this 165 level. There's a large bid there, so I would look for 165 to potentially offer some support and at least clues about how much supply the sellers may have. If they're able to pull right through that and absorb all of that demand, that gives you a sense there's more selling to come. So for order flow analysis, one of the big pieces is reaction. It's not just what happens, but how does price react? And I think that's a really important bit of clarification. So if we get back to 165 and we reject that and make a nice push higher, especially with some aggression by buyers, those larger green bubbles, that'll give you a sense they're rejecting that. They've got the demand to start making a push higher, and that could be a bit of a reversal. On the other side, if sellers are able to pull through 165 and continue lower, that's giving you a sense that they have plenty of supply to keep pushing. Meta, similar look to the rest of these Mag 7 stocks, just lower highs and lower lows, a bit of a push off the open, and then selling. And this one has a bid heavy book overall, 115,000 favoring the buy side. Decent size bid down there at 660, much bigger at 650. I would expect those levels to offer us some clues as to where the supply and demand is. But if 660 doesn't hold, it seems like 650 could be a reasonable downside target on a bloodier outcome. And you've got Microsoft here. Microsoft looking a little better than the pack in that it made a violent push higher off the open. Then it made a higher low, another push, which gave it a slight higher high. And from there, it's fumbled down to about break even. So it's showing a little bit of relative strength versus its peers, and it's balancing out here at that point of control to the top of it. Got a pretty large offer overhead on Microsoft at 465, 76,000 shares. So if we do get a nice push higher, I would look for how price reacts there, as that could be pretty revealing as to where buyers are with the amount of demand they have left. And then there's NVIDIA here. We're going to zoom into a 15-minute. Not much going on with the big guy. And I do have the options viz on NVIDIA. And actually now it's available on just about every optionable stock. So that's something I'm betaing right now. It's really, really exciting to be able to use these tools on just about anything that has options that trade against it. But we can see on NVIDIA, big wall of calls at 140 that matches up with that offer of 839,000 shares. Then we also have this key 2 level. This is another large area of options positioning. Happens to line up with a really large offer at 145. Almost like there's a big relationship between the way options and stocks trade. And then key 1, another large area of call positioning, lining up with that 3 million supersized offer at 150. So this can be really helpful when you see that confluence between where there's interest in options and where there's interest in the current order book. That can also give us a better sense as to levels where we may want to be managing our risk and also watching very closely for how price reacts. For now, NVIDIA is trading below that wall of calls, and that is formidable resistance. And then we have Tesla here. Tesla with a similar look. Pop off the open, drop. We got below the point of control. We back tested it twice, and now we're just consolidating below it. Order book on Tesla pretty even between 3.8 million on the offer and 4.1 million on the bid. Makes sense to consolidate a bit here, but lower than current price, 343, about 22,000 on bid. Worth watching there for reaction if we do explore that lower level. Let's get back to the S&P futures. S&P futures recovering a lot better than the Mag 7 stocks. That is interesting. Got a small stop run up there. That's 42 ES contracts that were bought by shorts at market. And Jason Braswell asks Palantir 150. So let me just take a quick look. I do have some tools that I use to monitor the options in these stocks as well. And I'm just waiting for some of that data to come through again. But I do recall seeing a fair amount of interest in those 140 and 150 strikes on Palantir. So that's not unrealistic. I mean, look, obviously the stock is extraordinarily expensive here. I don't think the valuation makes sense. But I also think the market is trying to look past that and looking towards one of the very few software as a service companies that has profitable AI offerings, both for enterprise and government. And there's some kind of secret sauce there. You know, I know a lot of folks still don't like the company or don't believe it or think it's part of some, nefarious global surveillance apparatus. I would argue all big tech is part of that, so we can't really get on our moral high ground if we even own the Nasdaq or S&P. But nevertheless, I do think that this is a company that in the long term will be one of the world's biggest companies. I don't know if it's going to happen in the next month, but over the next several years, I think that's all but certain. In the near term, 150 with the breakout that Palantir is having right now does not seem too unlikely. All right, I've got another question from Ships, and that's on the Bookmap YouTube. Teacher, gold is close to 33.70. I'm watching to see if it bounces or pushes lower. Yeah, I think on a swing time frame, I really like gold. Right now, it's consolidating, and I've got to update my chart there to get the new contract. So give me a second. I'm going to do that. It's going to be GCQ. So I'll give it a second to backfill data and all that. But with gold, I do think it has room higher. Let me pull up another chart that I have on gold as well. These are my pivots on gold right now. So y'all are welcome to screenshot this. This is where we are. We've chewed through a fair amount of sort of consolidation volume. We've taken out or basically built a lot of volume. So we took out one of the pivots that was overhead, and that's a good thing. That kind of opens up the move to 34.10. So in my opinion, there's two pivots with gold that really matter right now. It's 32.70 and 34.10. If we break below 32.70, we've got some room to re-explore some recent lows here. You've got 3203.50 and 3119.80 that come in view. You can see pretty cool that the swing long indicator came into play right as we tested that pivot. So right now, based on momentum and the price action that we've seen, gold is in a swing uptrend that has room higher. I am looking for gold to get back to its recent highs. Obviously, I need to see it take out 34.10, ideally on a closing basis to make that happen. But for now, I'd watch 3270.20 and 34.10 as your key major pivots for gold. We're likely on this move higher to see resistance at 34.10. If we do see selling pressure, I would expect some support at 32.70, but if it doesn't hold, we do have some other levels to watch here. Another thing that's worth noting, look at the Ichimoku cloud. Notice how gold is getting bought right at the top of that cloud repeatedly. That's very constructive. That shows you other folks are interested in trying to preserve the momentum. And then finally, if you zoom out and you look at gold through the lens of a Bollinger Band squeeze breakout, which is a classic way to gauge volatility that can work in your favor. Essentially, you've got bands that squeeze together and then they break out. Let me see if I can get this chart up for the Bollinger Band squeeze breakout on gold. Give me one sec. This is a pretty cool chart. And it's one of those charts you can just keep checking back and just see where you are in that progress with gold. So this is the chart that I made quite a while ago. I was just showing the initial squeeze breakout in early 2024 when I started to get even more excited about gold. Because what you saw here, this is a squeeze. Okay, you see the Bollinger Band squeezing together. You see the Bollinger Band width, or the width between the bands, also falling. That's a consolidation phase. Typically, the longer something squeezes, and you could argue even this whole period for years from 2021 through late 2023 was largely a squeeze all the way into early 2024. But the breakout is what you want to watch. So the squeeze is just sort of like, okay, it's like a spring, it's coiling up, it's gaining pressure. Now we need to watch for which direction that move takes us. In this case, the squeeze took us higher above the top Bollinger Band. Now, here's an important clarification. Bollinger Bands are not just like support and resistance. I know a lot of people treat them that way, but the reality is when you're in a Bollinger Band expansion, when you have that breakout from the squeeze, what you're really seeing is these bands can act like magnets, right? You see how much price hugged the top of that band, and you also see how bandwidth continue to expand with just a brief consolidation phase recently. This is really healthy for gold. It suggests there is still room higher in this breakout. So let me go ahead and get back to our new gold chart that we have and just clean it up a little bit. And so in today's price action, gold's getting sold a bit. Doesn't really surprise me too much, but overall, this is really consolidation. It's really, in my mind, looking at some of those big gains we've had recently, digesting them, and then I think, yeah, you know, moving forward, I think there is some more room higher in gold. So overall, not too displeased with the price action in gold. I think that we do have a lot of room to move higher over the next year. I would say that gold's going to be trading probably above $4,000 an ounce, and there's a reason for that. Gold is not just like this inflation hedge. In fact, if you really honestly take an assessment of gold over the years, it hasn't really outperformed inflation. But what it does do really well, it hedges against uncertainty. That is the true role of gold. When people become more fearful about the economy or geopolitical heat and tension or what might be happening with various policies around the world, the excess creation of debt, all of that is fuel for gold because it's fuel for uncertainty. So I think that gold is in a phase where buying dips makes sense. That's the mentality I have. I will say, in full disclosure, I had a GDX trade on the gold senior miners. That was a swing trade. Put that on for members at about $47 and just exited the core of that trade yesterday. And that was a pretty well-timed exit. That thing was up like 6%. And I figured, you know what? Just take some off. We'll leave the runners on. For me, runners are about 1/3 of the total position, so he took off 2/3. And this little give back, this little breathing that it's doing right now, I think is healthy. GDX down about 2%. I wouldn't want to necessarily enter here, but if you look at it in a longer term chart, you can draw a trend line on the top and bottom and see that channel it's trading in. So we got closer to the top of that channel. We're rejecting a little bit as gold is falling today. All of that makes sense to me. It's healthy price action, but I would, over the longer term, look for gold to continue higher. Okay. Yeah, so that was the aggressive absorption. So basically, I've customized the absorption indicator to show aggressive absorption by setting it to some extremes and doing just a little bit of customization. And those can be really helpful to find turning points as well. So we talked about exhaustion prior to the live stream, just in the prep. Absorption events are also similarly helpful for identifying where there might be potential for a reversal. And of course, it's all about the price action that follows. As you can see with both the Nasdaq and the S&P, it took 3 aggressive absorption events before that reversal finally happened in the overnight trading. So let's zoom out a little bit. We can see some of the flow here. Got about 5 minutes left in the stream. Right now, it's pretty evenly matched. The hot call is the most active option on the S&P chain, about 7,000 across the 2 most active calls, 5,000 across the 2 most active puts. Going to want to see how that takes shape. You can also see that SPX 6,000 call wall overhead, and that is where that second most active call strikes interest is focused. So we've already got folks gunning for SPX 6,000. It might be time soon to bust out those hats again. Also got a lot of order flow coming into NVIDIA call options this morning, targeting the 140s and the 142s, 143s. Some of these are sweeps too, which just basically means they're taking all the inventory that's on the order book. Let's quickly check on NVIDIA stock, see what's going on there. So not a lot, just a bit of a gentle pull higher into this call wall. That option activity, though, that really took off about 15 minutes ago, helping to put in a bottom. Now we're getting very close to that wall of calls. Let's see if they have the demand to take it out. I'm going to guess that they probably do, but let's see if we can have this play out in the next 3.5 minutes or so. Good morning, rainy days. You're welcome, ships. Just 5 cents, 3 cents away from that call wall. 855,000 shares on offer there. And it looks like the buyers are going to take it. It really looks like the buyers are going to take it on NVIDIA here. They're getting more aggressive too. You can see that delta bubble enlarging. There they go. And look at that reaction too. And you can see there was some absorption by sellers, largely because of that offer. But buyers are undeterred. They're testing that call wall right now on NVIDIA. And we saw the flow coming into options, giving us a clue that that was going to happen. And soon I'm going to be able to show that flow live right in Bookmap, which will be really cool. So that's coming soon. Good morning, Casey. Casey says, good morning from Indiana. That's on the Substack stream. And we're streaming to all kinds of different places right now. 2 YouTubes. We've got Twitter or X. We've got the Bookmap Discord. We've got Substack. We've got Kick. We've got Twitch. There's just mayhem all over the place right now. And we're continuing to push above that wall of calls, that over 800,000 offer. You could see it in the session volume profile. There's that big buy right at the call wall. It's pretty awesome. And more sweeps coming through in NVIDIA targeting 141 and 142 on the stock. They just keep sweeping those strikes, and these are all near dated expiries for what it's worth. These are all in June, mostly OPEX in June, some of it this Friday, just all over the tape. So pretty much destiny, it took out that wall of calls. There could be some room for continuation here as we continue to see constructive flows hitting NVIDIA. Exactly, Casey. The call wall will fall. And so it did. And so it did. Typically, after you take out a level that big, there's a little consolidation. But at this point, with the amount of flow going into NVIDIA, it looks like it just wants to move higher. So you got 141. That's another area of large options interest. We are seeing strikes coming through on 141, on 142. Reasonable amount of flow here. And folks, once again, we are offering a 30% off for the life of your plan with us. If you're a new client and you've been looking to check out TraderAid, to join a community where you're among good company traders from all different backgrounds with amazing cutting edge tools, actionable ideas, and analysis, check us out. Use the code 30LIFE at checkout to lock in a 30% discount for the life of your plan. If you'd like to learn more about Bookmap and check it out for yourself, visit traderaid.com/bookmap. Scroll down to the special offers. You can get up to 40% off. And by the way, Jolts just hit the tape. Came in better than expected, 7.391 billion versus a forecast of 7.1 billion. So that is a more aggressive Jolts print than what may have been expected. We also just got factory orders, month-over-month actual at negative 3.7% versus a forecast of negative 3.2%. The prior was 4.3% on the positive side. So that Jolts, that may be a bit of a event to push markets a bit lower and rates a bit higher, but we'll see. That is just typically the standard fare for economic data. Is bad news is good news and good news is bad news. This isn't that much of a deviation versus the forecast, though, so I don't know if it's going to be that big of a market moving event versus some of those prior Jolts where I've been live with you guys, and they've been bigger deviations and had a bigger immediate impact on price action. So I want to thank everyone for tuning in. Come back next week, Tuesday, 9 a.m. for the next episode of Back to the Futures with me, Markets and Mayhem. Wishing you all an awesome trading week ahead. I'll see you soon.